Patriot News Hour, Joe and Jason on this Thursday, wrapping up January. We got one more day. Yeah, wow. End of January is here. Obviously, if you hadn't seen it, the Black Hawk helicopter colliding with the American Airlines passenger jet last night. No survivors, 67 people total, I think, between the people in the helicopter and the plane. All perished yesterday. Kind of something you just don't think you'd ever see. Going back, I think this is the worst U.S. plane disaster since 9/11. If I'm right, I believe that I am. Kind of just a weird thing, and it's been a weird world, hasn't it, for quite a while. And we've got RFK testifying for the second day. If you caught any of that, that was wild. Probably going to be wild again. Tulsi Gabbard, I don't even know if she'll make it out of committee here. It's going to be, those were the three big. Hexit and these two were the three that we worried about. We got, there's one in. I say we, I don't know, the Trump side got, Hexit got in. I don't know about, I'm really rooting for these two, though. These are the two I would like to see, because you know what? They're going to shake things up, and I think shaking things up is going to be a good thing. We had the Federal Reserve yesterday, as expected. No rate cut. Jay Powell, though, saving the market. The statement was what I guess they would call hawkish, because all the statements leading up to this one were saying, well, we're making progress on inflation. We're making progress on inflation. They took that out, which kind of leads most people to believe, okay, does that mean we're no longer making progress on inflation? Which, of course, we're not, but, But Jay Powell he was, I'll give him credit. He had a good answer. He was ready. He was ready for it. He said, oh, no, we were just shortening the sentence. Yeah, so we just took that, that's all. It was just a shortening of the sentence, and we just took that whole thing about inflation out. Donald Trump was not happy, attacking the Federal Reserve, blaming them for their role in inflation, and obviously wanting those rates to come down. At the same time this morning, the ECB, they did their part, Jason. They lowered rates and also said, hey, rates can go even lower. Gold's at a new all-time record high. Silver is flying. We did get jobless claims today, down to 207, so down near the low. So, once again, we're not sure what to believe, what not to believe, but the job market seems strong. It does, at least on that metrics. We had GDP today. So we got a lot of data today. GDP came in less than expected, 2.3% for the fourth quarter. Just know this, and I educate everybody. The highest GDP readings are always the second and the third quarter. The first and the fourth are always the lowest. Of course, how do I know that? Well, because they seasonally adjust everything, and that's just how they set it up to be. But it came in less than expected. And then we also got pending home sales. And this was really the big data miss. That really missed badly. And we've had, when Trump got the inauguration, when he won, I guess, the election, not the inauguration. When he won the election, you kind of had a little bump in home sales. Now we find out that was all it was. Pending home sales crashed. I mean, it missed really big. And then we had earnings. Not great from Tesla. Another quarter, more declining car sales from them. But don't worry, they made money on Bitcoin, so they're okay. Microsoft missed, which you don't see Microsoft missing that often. And then UPS today, absolutely getting hammered today as UPS making it official. They are going to lose 50% of all of their Amazon business by this time next year, and their stock is getting taken to the woodshed right now. But, Jason, there's a lot to talk about today. We're going to go through all of these things. We're going to go through Jay Powell. We're going to go through what Donald Trump had to say, GDP, jobs. Everybody's trying to figure out what comes next. And today, you got a little bit of everything, right? If you're bullish, you got some stuff. If you're not bullish, you got some stuff. Here's the thing. Remember what we keep telling you. It doesn't matter. Gold and silver are going to outperform, and that's exactly what's about. There you go. Gold now, 2801 spot. Here's the thing. Come Monday. It's the February gold contract. February gold, 2860. You heard me right. Listen, it's all hands on deck here. 800-951-0592. The website at allamericangold.com. But, Jason, like I said, this has been an action-packed month. Today is an action-packed day as both gold and silver busting through key resistance points. Get ready. We're going to be seeing, like we said, they're going higher because, well, we're going to keep spending. We'll be back. 800-951-0592. A quick look here. The Dow's up 10. The S&P's down 10. The Nasdaq's down 130. The 10-year note down a little bit here, 452 on that weaker GDP. I'll just tell you, none of the auctions have been great this week. All kinds of tails, all kinds of stuff. We're being saved here by some weaker economic data, weaker GDP, pending home sales. Crude oil is up today. Now, crude's come down. Remember, crude got to like 80, 73 and change. Gold, like I said, gold, get ready here. So we're spot gold at this exact moment is currently up $39, $27.98. We've got new all-time record highs in gold. But here's the problem. Forget that number. Forget it. Why? Well, we got tomorrow. By the time we get back here on Monday, you'll be at the February gold contract. So you guys that like to watch the TV, right now, this second, up $55, $28.4850. So let's round it up, $28.49. It's been as high as $28.60. Silver, right now, spot silver up 71 more cents, $31.50. Remember, we were waiting for 31, waiting for 31, waiting for 31. We're through it. By the way, TV silver, that's a March contract, but I want to point this out because it's really important. 32, almost 32.70, 32.68. So you're looking at silver and gold both. That's more than $1 difference between where silver is right now and this March contract. You understand almost by default, gold and silver are they're ramping higher here. News breaking out of London that the 4 to 8 weeks now on gold deliveries, that's how far behind they are. And this is weird because when London gets in trouble, you know, they and New York does it too. They'll borrow gold from the central banks that have it there. Now, I know a lot of these central banks have been sending their gold home, but it is interesting. You know, London claims that they're holding about 5,000 metric tons from various central banks around the world. Then why should it take this long? kind of interesting, these developments here. I'm just going to tell you, and I've been telling you over and over and over and over again, get more diversified. You got some big IRAs. Listen, stock market's done well. Take a piece of it. Get your precious metals IRA set up. If you're sitting there with big bucks in the bank, what are you doing? That money devaluates so fast. How much all of these things have devalued by just sitting there. You know, think about it. If you had $100,000 sitting in the bank in 2000, you could buy a house for $100,000. I mean, the median price, you know, was about $130,000. But $100,000, you could buy an entire house. Gold wasn't even $300. Think about it. Think about it. Now today, that $100,000 you can't buy. I mean, unless it's in some form of repossession by the state, and you know, you can't even buy a lot for $100,000. You can't do it. And I just don't understand the logic of some of these people. You know, if you would have taken that $100,000 and bought gold, right? You would sit here today and have about $1 million. I mean, that's what's happened. Call us. We can help you. 800-951-0592. So again, Donald Trump not happy. Now listen, I think the Fed did about as good as they could yesterday. They can't raise rates, or I'm sorry, lower rates, and actually act like they care about inflation. We know what the numbers are. But the realities are, we have to believe they were just shortening a sentence, Jason. You know what? I know, ready for this, the Fed statement, just so people are clear, it's a little over a page. It's like literally a page. It's one page. So Jay Powell tried to tell the world that, well, we just shortened the sentence. Apparently, those 5 or 6 extra words. And what did they take out? Just as a reminder, they've had in this statement that they continued to make progress on inflation. Right? It's about 5 words. They took that out. And Jay Powell kind of saved the day by saying, we didn't take it out because we stopped making progress. He wouldn't go there. No. We were just, shortening the sentence. But Donald Trump wasn't having it. On his Truth Social account. Because Jay Powell and the Fed failed to stop the problem they created with inflation, I will do it by unleashing American energy production, slashing regulations, rebalancing international trade, and reigniting American manufacturing. It's a great sentence. Here's the problem. Reigniting American manufacturing just means we pay more. Right? Because how is he going to do it? Well, simple. I'm going to put tariffs on the stuff that's coming in. Which means what? Well, that means, hey, they moved it somewhere else so they can bring it here for less. So that part of the statement doesn't quite work. I'm going to unleash American energy production. Sounds great. And listen, Donald Trump actually did that in his first term. He did. We're producing record amounts of oil today because of the stuff that Donald Trump did the first time around. Those are true statements. But I promise you this. Let's just say, and I said the oil's $73, which isn't that bad. If oil went to 60, I promise you we would not be at record oil production. Just won't happen. It won't. Why? Because the drillers and the oil companies are like, well, we can't make money at 60. So we won't drill more. See, so again, now slashing regulation, that's helpful. I don't see any inflation in that piece of it. Obviously, rebalancing international trade, we know what that is, right? Right. He's talking about tariffs. So that really, it sounds great, but it won't help. I will do much more than stopping inflation. I'll make our country financially and otherwise powerful again. The Fed has done a terrible job on bank regulation. That's true. Matter of fact, most of all the protections from Dodd-Frank for the banks, they just did away with. They didn't do away with them for us. We still got the same problem. We're going to be the ones still holding the bag, but the banks now, they just let it off and go. He says that the Treasury's going to lead the effort on regulations, which somebody's got to lead it, and I think that's as good a place as any. Unleashing lending for all American people and businesses. Boy, you better have some help with rates, right? Because right now, look at pending home sales. They're not buying them. Why? Rates are too high. Automobiles. Man, GM's getting smacked. Tesla got smacked, right? They're all getting smacked. And here's the bottom line. It costs, listen, to make a car, it costs X amount of dollars. And the auto companies, they make anywhere from, $500 to a couple of $1,000s on a car. That's what they're, if they could get $2,000 on every car they sold, they'd be elated. So it's not like there's a lot of room in there. And if the Fed can't lower rates, I don't know how this is going to happen, but he's putting pressure. I think here's the bottom line. It doesn't really matter what he said, Jason. He's trying to pressure the Federal Reserve into doing what he wants, which is to lower the rates, because a lot of this other stuff, if the rates aren't low, none of that stuff can happen.
Right. And it's funny how he says he wants to lower inflation, but then lowering the rates doesn't really lower the inflation. And you mentioned the GDP numbers.
Probably makes it worse.
Yeah. Well, obviously you got to pick your poison. But if you mentioned the GDP numbers, without the inflation, where would the GDP numbers be? Would we be in recession? Would we have a negative number? Would it be at 0.5? I wonder how much of that GDP, and I wonder if that's really the number that counts the most, is trying to keep GDP positive. And whether you would go lower or higher rates and all that other stuff is really centered around we need a positive GDP to make it look like things are working. But that's what I wonder, Joe. Without the inflation, do we have a positive GDP?
Well, you know what, and that's an interesting question. Obviously, the inflation is a big part of it. When you looked at the GDP report today, all of the growth was in government and then, of course, in consumption. Right. So what is consumption? That's us. That's the citizenry. And there's, when you look at the citizenry and you look at consumer spending, it was up 4.2%. Now GDP was only up 2.3%. But when you look at the spending, you're seeing the consumer obviously having to spend more, right? Almost about half, right? It's like half of it that the consumer spending is just inflation, right? It's not real. It's just running real hard to staying in place. And so these are the two things when I looked at the inflation report. consumers and how much they had to spend. And the fact that you see GDP so far below what the consumer was spending leads to, okay, a lot of that was just inflated. It's not like we bought more stuff, right? And you can look at housing sales, look at car sales, right? Those are the big ticket items. Look at what Polaris said, right, about quads and all-terrain vehicles and jet skis, right, how bad it is. RV sales, right, which were sky high during COVID, collapsing. And then you look at government, up 3.2%. So again, also way above where the actual GDP is. And this is one thing, listen, Donald Trump's doing this. He's cutting government. That is going to happen. There's going to be ramifications to that government cutting, right? And what is that going to be, right? How much is that going to hurt the economy? And I think it's going to hurt it more than people realize when you look at how much government spending is going on and how above GDP it is. These are all things that tells you inflation. 800-951-0592, Patriot Radio News Hour. Joe and Jason here on this Thursday. $20 gold pieces, $2,800. As I told you, the February contract, which starts pretty much Monday, it's already started really, $2,850. So way below spot, but I'm going to do one thing different today. The first person that calls and orders 15 or more, you can order more, but if you order at least 15 of them, the first person that does it, by the way, that's 42,000. I have a $3 Princess. I've had it sitting in my vault for quite a while. This is an 1855, and the $3 gold piece kind of was like the $2 bill of its day. And they just didn't really make a lot of them. You know, it was minted from like 1854 to like 1889, but most of the years, if they minted 2,000 of them, that'd be a lot. So they just didn't make very many of these. This coin's worth.
And Joe, when you have the $20 Liberties, essentially it's just a little less, but it's essentially a 1 ounce coin. The $10 Liberty is a half ounce, and $5 Liberty is a quarter ounce, and then you have the $2.50 coins. Those are actually more popular because it's like an eighth of an ounce of gold. So the $3 one, it's kind of hard to relate and do the numbers. You know, most people have trouble just doing the quarter ounce and the eighth ounce thing with the $2.50 coins, right, Joe? But the $3 ones it's a good description that it's like the $2 bill. It's like,
yeah, very much like the $2 bill because they just didn't mint very many of them at all. And it's the Lady Liberty with this headdress on, right? Kind of like the Indian, but not really the Indian headdress, but this headdress on, and on the tail side, it's kind of that cool design. It had the reefs, making the horseshoe type pattern, and in the middle it just says $3 in the date. These things are super rare. This coin alone is worth about $1,000 all day long. All day long. If you buy 15 or more $20 gold pieces at the $2,800, the first one, I only got one of them, you're going to get this 1855 $3 Princess. And they're just super. I'll tell you right now, the Princess coins, they don't even give a price on the spreadsheets for them. It's always got to call. But this is a definitely a a coin where the value's more in the rarity than it is in the gold. And we don't do that, right? We want you to buy for the gold. So I'm going to throw it in for you. There you go. This $3 Princess, the first one that orders 15 or more $20 gold pieces at $2,800. Absolute steal. Absolute steal on that. Then you're going to get this Princess at 800-951-0592. More earnings coming out. Caterpillar now warning that its revenue forecast for 2025 is going to be lower than expected. And Caterpillar saying this morning the margin outlook for CAT is still being pressured. In other words, hey, we're okay. We've raised prices enough, but yes, prices are still rising. They're saying that they have solid cost controls and production cuts. So they're still confident, Jason, on their earnings. Hey, the earnings are going to be okay. But, yeah, we're going to sell less equipment. Then, of course, as we shared, shares of UPS down more than 15%. The largest intraday decline for UPS in decades, on track for its lowest level now, going back to COVID. So UPS now at the lowest level since July of 2020. They have a dismal 2025 revenue forecast, and that they're going to slash 50% of its shipping volume with Amazon by the middle of next year. So, Jason, not only did, remember, UPS, they got huge contract increases, but it looks like now UPS is saying, hey, we're probably going to be in cost-cutting mode, and a lot of it due to Amazon and losing that business, on top of the fact that they said overall business has generally been weaker.
That's across the board, it seems, Joe.
Yeah.
Business seems to be weak all across the board. That's why I had to ask the GDP question, because it just doesn't quite make it. When I asked the GDP question, I was thinking about the Obama years. Remember, it's no longer the housing collapse. We're past that. We got 0% interest rates, and you just couldn't get it to 2% every year, right? 1%, less than 1%, 1.5%. Just couldn't get GDP to 2%. Remember that? 0%. Didn't have the inflation we have now. And doesn't it feel like we have the inflation and now the GDP being at, what did you say it was, 2.7, 2.4? 2.3.
2.3 for the fourth quarter.
Doesn't that 2.3 GDP seem worse than the 1.5% that Obama had in those years? Doesn't it seem like that's a worse GDP?
Probably, that's hard.
Yeah.
There's differences. I don't know. It's early to tell. But when I look at how we got it, so we got it from the consumer, which was about double the GDP print. Normally, what you like to see is, hey, consumer spending, it was up, say, 1%, but GDP was up 1.4, right? That you like that. This one, it takes some shine off of it when you say, hey, GDP was 2.3, but the consumer was up 4.2. Right? So that tells you that a lot of that consumer spending was just increased costs. We actually didn't buy more stuff, right? We just had to pay higher prices. And then the bigger part really is the government. How much government was spending, and I know Donald Trump is trying to rein this stuff in. There will be a cost to that. We haven't seen it yet. And obviously, they're getting offered severances. They've been put on paid leave, so they're still getting paid. We haven't seen it show up in unemployment yet. But yeah, kind of one of those things, not as good as the number probably would indicate. We'll be back after the break. We're back here, the half-empty cup. That's coming up next. By the way, it should be an action-packed show as well. Patriot Radio News Hour here on this Thursday. Again, we still have $20 gold pieces, $2,800. We still have the first one to order 15 or more. I'm going to throw you in this $3 Princess. This is it's super. They're very rare. 1855. I kind of called it like the $2 bill of its day. Like Jason said, back in the day, go back to the 1850s. A $20 gold piece, man, you were rich if you're walking around with 2 or 3 of those in your pocket. So a lot of people it was silver. You had there was a $10 gold piece, the $5 gold piece, the $2.50 gold piece. Those were kind of if you had a gold piece, it was probably that 2.50 or that 5. Right? Those were
or the $1 gold piece. Or
the one. Yeah, that's right. You had the $1 pieces back then, right? But this $3 piece, it never really took off. It just never really took off. They minted them for a bunch of years. But most of the years, the mintage was, a couple $1,000. A couple thousand, if that. That would be a big year. So there's just not that many of them out there. But I'm going to throw that in. You're going to get that. Like I said, it's easy $1,000 plus here. $800.
$3 was a lot of money. $3 was a lot of money, and it was a lot more money
back
than
then,
$1.
especially. Yeah.
I mean, back in that time frame that Joe's talking about, there was actually a 20-cent silver piece. It lasted just for a little while. It was unpopular, but there was the fifth of a dollar silver piece. Yeah. Now it's just a collectible.
Half cents, right? Stuff like that. Yeah. I mean, you had all piece, that kind of stuff back then.
The 3-cent nickel piece and the 3-cent silver piece. Yeah, these amounts of money actually meant something back then, Joe.
Yeah, that's true. 800-951-0592. Now, to give you an idea of how worried I am about this GDP, it was a record for the biggest beat from the consumer versus what was expected ever. They were only expecting 3%. They got over 4%. On top of that, it's the first time since everyone got the COVID checks, and if you don't count the COVID checks, you got to go back decades, where consumer spending increased more than 4% for 2 quarters in a row. So it's highly unusual. It really is unusual to see the consumer having to contribute. Basically, they over-contributed. If you would have done the consumer, GDP would have been almost 3%. It was everything else that was kind of driving it down outside of the government. GDP or the consumer and government were pretty much everything. Fixed business investment was down, aircraft spending down. Everything else was pretty much down in the GDP except those 2 categories. So it's going to be something where, like I said, if we've seen a huge slowdown at the border. We're seeing people being deported. The government trying to rein in the spending. You can see GDP falling pretty quickly. Listen, that's actually would be a good thing. I know it doesn't sound like a good thing, but Jason, it would be a good thing. But again, I think part of the reason why Donald Trump wants these rates down is he knows, hey, we're gonna eliminate a lot of stuff here. I need cheaper rates so businesses will spend, so these people that are going to get fired can get a job or make up for the immigrants that we're getting out of this country. They're going to need lower. I think Donald Trump gets it. Unfortunately, the Fed is like, listen, we can't lower rates until the prices start going back down, and the prices won't go down until you fire everybody. So it's kind of this conundrum that we've been saying this for a long time. It's not a good. There's no good way out.
Well, and when he was running for president, I think this goes back to maybe 2023. He's starting his re-election run, and I know in early 2024 he talked about he didn't want to be the next Herbert Hoover. He foresaw economic downfalls coming, and he knew that. And remember, he wished it would just happen before Biden left office. He was hoping it would just be sooner, and so he knows something's going to happen, Joe. And so, if the market's going to have trouble, and he's going to do everything he can to stop it, and with what limited tools he has at his disposal, it's okay for him and his rich buddies that they brought to the inauguration. When you're holding assets and there's you want to inflate your way out, because that's the goal now. It's pretty obvious, Joe. That's the goal, is to inflate their way out of it. Those that are holding assets will do better. Maybe everybody loses money, right, Joe? Maybe everybody loses money. The markets come down. We lose a lot of value. But in an inflative situation, the guys holding assets like gold and silver, for the guys listening to this show, you're better off at the end of whatever that cycle is, because your assets will go up, or at least it'll hold court, right, Joe, while everything else is going down. Like NVIDIA stock. How strong is that stuff going to stay if the headwinds of what I'm seeing looks like there's a lot going against the AI valuations? AI is here, but is it really that valuable, Joe? Is it really at the levels of these companies? Is Tesla really worth the 10 top car companies combined when it only makes 1/10 of Toyota's cars in a year, right? Yeah. These things are going to start coming. The real value might be coming here soon, Joe.
Well, if you needed some other things, medical costs, Cigna, shares down almost 10% on a big earnings miss. Higher medical expensive. But don't worry, the company says that they're taking corrective action. Oh, gee, I wonder what those are. Oh, wait, higher premiums? Yeah, final segment coming up. 800-951-0592, Patriot Radio News Hour, Joe and Jason. February gold now up $50 right now, $28.45. The $20 gold pieces are at $2,800, so well below spot. And then on top of that, we still have it. So it's the first one that orders at least 15 20s is going to get the $3 1855 Princess. That is the gold $3 Princess. Really super great coin. And hey, what a great thing. Hey, I get to save, I'm getting a free $1,000 value in the Princess. And it's been sitting in my vault. It's just been sitting there. It's like I've had it for I don't even know now. It's like 6 or 8 months because I only got one. I don't want to sell it back because you just don't see them that often, Jason. I've been doing this for 20 years, and I've probably seen, I don't know, a grand total of maybe 10 princesses in the 20 plus years I've been doing this. So they just don't come around that often.
No, it's not a regular coin that we sell just because the premium is well above the gold price.
Well above the gold. Yeah.
But where do you think? Maybe we should, since it's Thursday. What do you think gold will? When we get on the air on Monday morning, where do you think the gold spot price will be? Maybe we should see. Well, I'm going to take a. Let's you and I take a guess. Let's see who can get closer, just for some fun here.
Good question. Where will the gold spot price be?
It could be anywhere on the board.
You're right. I'm going to say this. I'm going to be conservative. And I'm going to say 28.65. That's going to be my guess. I'm guessing that we And that's, I don't think we're going to get a sell-off tomorrow, and I think we could actually see higher prices again. But 28.65, because it's the weekend, something's going to blow up. I don't know what, but I think something will happen. But that's my guess.
I'm going to go with 28.95. How's that?
It could be. Yeah. Yeah,
let's just see what happens Monday when we open. I want to see. Let's have some fun with it because I could easily see
it. It could be one of those weird.
Way,
we saw this a few times last year where it just kind of jumped. Right? Hey, we broke through like I don't know. What did we have? $2,300 gold lasted for like a day and a half. Right? And we just went right to 24. And so it's possible we could see something like that. Obviously, the news out of London with taking so long now to deliver these gold contracts. And then, of course, remember, I don't know where it's gone. I haven't heard a lot, but Saturday we're supposed to start getting all this tariff stuff. So it's kind of disappeared a little bit. So I don't know.
It was good that you pointed it out. Does anyone remember 2100's gold, 2200's gold, or 2300's gold? I mean, it's like those levels didn't even exist, did they, Joe? We just blew past it last year.
Just blew past it. And, of course, we've been sitting, how many times did we get near the all-time record highs until we finally blew through it today? But again, we'll see it. I'm looking at silver, too. Like I said, that March silver contract, it's $1 an ounce more. That's just crazy. That's a lot of ground to make up. But we'll see. It'll be interesting on Monday where it's at. 800-951-0592. Patriot Radio News Hour. Jason and I coming right back.